100,000 I'd rate as very conservative, probably overly conservative. I'd rate 200,000 upwards as a sweet spot, 300,000 not out of the question, and I do not ridicule $1 million.
Hello there from Bedford in the United Kingdom. How are you all doing? Well, I know you're all doing great. It's been a great week for Bitcoin with the price hitting new highs. We nearly tapped at $24,000 the other day, so I guess you're absolutely all flying out there. Feels pretty good, right? Congratulations to everyone who's weathered a really long and horrible bear market. Anyway, welcome to the What Bitcoin Did podcast, which is brought to you by the Mighty Kraken, the best place to buy, sell and trade Bitcoin. I'm your host, Peter McCormack, and today I've got an interview with Willy Woo, where we're going to recap the 2020 trading environment. But before that, I do have a message from my amazing show sponsors. So today we're going to kick off with Casa, who without doubt is the very, very best in Bitcoin security. And listen, with Bitcoin mooning, you really, really want to get your Bitcoin security sorted. You might be sitting on some nice gains there and you do not want to screw things up. I did this about 6 months ago myself, and I am now protected from hackers, personal mistakes, in-person attacks, device failure, and so much more. And with Casa being such badasses, they've got a product out there for every Bitcoiner. So with Casa Gold, you get triple the security of a hardware wallet, and that comes in at only $10 a month. With Casa Platinum, you get their 3 of 5 multi-sig, and that is the best protection for large Bitcoin holders, coming at a really great price. And with Casa Diamond, you get their full service offering. This includes a customized personal security review, inheritance planning, and of course their best-in-class security. There is no better time to upgrade your Bitcoin security and get total peace of mind. If you want to find out more, head over to keys.casa, which is keys.casa. Next up, we have sportsbet.io. Have you ever checked them out? You really should. They are the best in online gaming. And why? Why is that, Pete? It's because they accept Bitcoin, of course. They don't just accept Bitcoin. They love Bitcoin. They love it so much. They sponsored Southampton in the Premier League. They put a Bitcoin logo on a Premier League shirt. So billions of people around the world watching football right now, watching the Premier League, is seeing about Bitcoin. Pretty cool, right? They're also the betting partner of Arsenal, and they're just doing so much to promote Bitcoin. And if you're interested in gaming, then Sportsbet has a market for every possible need. Everything from the Premier League to US sports and everything in between. And for new customers, they always have a range of promotions available. Just head over to sportsbet.io/promotions, which is sportsbet.io/promotions. Okay, so onto the show today, and it's the first in a new style of show. If you follow me on Twitter, you may have seen that I announced that for 2021, I've asked 3 people to join me on the show for regular updates on specific subjects. So, Shinobi is joining me to cover all things techie, Lynn Alden will be covering everything macro, and with Willy Woo, I'll be covering Bitcoin trading and on-chain data. And each has agreed to do an end-of-year review, so we're kicking off today with Willy, covering on-chain data and the trading environment this year. Now, I've always followed Willy's work. I also got to meet him in Vegas earlier in the year and hang out and spend a bit of time with him, understand what he's about, and I just like his work. I like the fact that he uses on-chain data as a way to plan his trading. It's pretty cool stuff. In this 2020 review, we get into corporations buying Bitcoin, the potential for a supply shock with more and more large buyers entering the market, why this is different from 2017, and how high the prices could go. It was a really great episode to kick off these new types of shows, so I hope you enjoy it. If you've got any questions, you know you can reach out to me. It's hello@whatbitcoindid.com. And separately, I've just announced that I am launching a daily email service covering Bitcoin, macro, and tech. That's available at thewakeup.cc. That's www.thewakeup.cc. That's going to be launching early next year, but you can register now. Anyway, have a great weekend, and I'll see you all soon. Willy, man, good to see you again. How are you?
Hey, Peter. Great to be here again. Yep, I'm good. Good sitting here in Hong Kong. How you going?
Good, man. As we both said before we started recording, it's been a strange year. We've both historically been used to a lot of traveling, especially in this industry. And last time we met was in America, and the first time we met was in America. And now, don't know. This feels like a long year.
I've noticed that. Sometimes years go by and they just fly by, and this one's been really kind of strangely full. Yeah.
Do you know what I think it is? It's been a slow year, but I can't really think about what I've done. Like last year, I did a lot of stuff. I could list a massive amount of things I've done, but this year I would struggle to do that. I think the saving grace for people like you and I has been that it's been an incredible year for Bitcoin, a really interesting year for Bitcoin. So whilst we've been locked away, we've kind of had that to consume us.
That's right. Yeah, it's been pretty full in the industry here, for sure.
All right. Well, listen, look, we've got a lot to cover, man. This is my first time going through a bear market into what looks like a bull market. You've been through these cycles before. You know, I'm historically really just a 2017 guy who just only ever knew the way was up to begin with, and then then witnessed it all come back down again, and then like ride out a good 2 to 3 years of like, you know, tough 2 to 3 years just trying to like understand what's going on. But how's it been for you this time compared to, say, you know, what happened in 2017?
You know, every year is different. Every year in crypto's got different narratives, different technologies, different kind of underlying drivers, and yeah, I mean, so I'm always learning. Every year is a different kind of learning. This one's been really full, you know, and this, you know, you say this is your, well, I guess it's your second bull market. This one, you know, I would say this is the most volatile bull market we've seen, you know, in a long time, and the structure of the market's changed quite completely compared to, say, 2017. And see, like you saying that we're now in a bull market tells me like just how different this one is, because a lot of people have been thinking we've been in a bear market till this year, and in reality we've been in a bull market since essentially the start of last year. But you wouldn't know it because just how choppy it's been.
Right. Okay. Interesting. So you're gonna have to explain that one to me, because I felt like we had this kind of like fake out bull market last year. I think we went up to, was it like 12? I can't remember if we hit 14, because it was around Bitcoin 2019. We kind of spiked, and then we kind of came down again. And then 2017, like 2020, we started building up again. And then obviously we had the big shock with COVID, which we'll come to. I'm going to get the chart up my side, but you explain to me what you know that tells me that the bull market started in 2019.
Yeah, like I try to keep like away from just reading too much in the day-to-day price action. Obviously, we have to look at that, but a big part of what I do is look at the investor activity that's driving the market. And so I kind of look at this thing as you've got these long-term investors, new people coming in, and they go through these cycles. And you know, obviously what I do is analyze the blockchain for its data and look at flows of capital. And you can look at the investment flow coming into Bitcoin using what you see on chain. And so with that, you can see when you know, investors are sort of backing away, there's not a lot of movement in coins, and you want a lot of movement in coins because that means that there's a lot of investors coming in. Because whenever an investor comes in, they're buying coins, so coins move to these new investors. So that bottomed at the start of last year. You know, we had that crazy cliff from 6,000 down to barely above 3,000, and that kind of marked the start of the year of 2019, and it sort of ran along this bottom, and there were a lot of investors accumulating at that very, very cheap $3,000 range. And what I try to look for is that kind of discrepancy between what the investor dictates for price and what the real kind of daily price we get. And now, you know, and so the daily price is very much dictated by short-term speculators. And we saw that last year when we had this crazy run-up from, you know, what was it, broke 4,000 and just ran up to 14,000 in a matter of like a few months. And actually, investors did come in, but it just ran far in excess of what the fundamental investment flow was. And so that kind of led us into the 2020 phase where we overran and we kind of blew off that top, and it took a while for the price to start to settle, and there was a bit of sell-off, and so that kind of led us into the 2020, and it was kind of it was like this new hope because we'd bottomed out, and I saw that on a number of indicators, and I think a lot of that early phase of this year was dictated by the PlusToken Ponzi scheme, which happened in 2018, 2019. This is like the largest Ponzi scheme that Bitcoin certainly had. I don't know how big the biggest one in the world is, but there was over $2 billion sucked into that Ponzi scheme.
I think Mados was like 50 billion or something.
Oh, yeah, okay. Yeah, okay. This does not count as big then. It's true.
Yeah, but it's big for Bitcoin. Oh, no, hold on. All right, let me have a look at this. I've got it up. $65 billion.
If you were to call fiat money a Ponzi scheme, that probably goes into the trillions.
Yeah. Well, as a percentage of the amount of dollar available is very small, whereas I guess as a percentage of the Bitcoin, this is quite high. It's probably best to explain to people what actually happened with PlusToken.
Yeah, so PlusToken was this thing that came out of China, and like all Ponzi's, you bring people in and then you pay them some sort of payoff, saying you're earning great returns, and that's being paid by the new guys coming in. And this Ponzi brought in 2.5 million people, and to put that in perspective, even now in tail end of 2020, we have about just over 100 million people in crypto. So they brought in 2.5 million people there, and over $2 billion. So that was a colossal $2.5 billion at the time, and so it accumulated somewhere between 200 and 300,000 Bitcoins. So 1% or more of the supply, and pretty much a quarter of all the coins that Satoshi mined was in that Ponzi. Like in size was this PlusToken, and so we had to endure this sell-off as these tokens got dumped back onto the market once.
So how were they getting away with that though? Were they mixing the coins?
Well, a lot of it went through Wasabi Wallet. I mean, what happened, what transpired was in July, these guys got caught by Chinese law enforcement, and and that coincided with the peak, that $14,000 peak in 2019. That was when the Ponzi stopped, and so in part we could say that overly fervent run up was PlusToken buying and buying and buying. And then on the other side of it, we started to see sell-off, and a lot of it was being mixed. And it went through Adam Pfizer's wallet, which is called Wasabi, which it does a lot of mixing. And so this process of obfuscating the blockchain trail of transactions. And so a lot of it went into Chinese exchanges and sold off. And, we were tracking that. I think a guy, Ergo BTC on Twitter, he was tracking it on chain. Somewhere in the vicinity of 150 to 170,000 coins got dumped back onto the market. So 1% of the supply was huge. And it kind of started petering out by the time January came in 2020. Chinese law enforcement came in around tail end of November, I think, and they confiscated the coins, the remaining coins. I believe they're all sold by now. Just talking to people, I think that's all sold out of China. So we don't have to worry about that now, but certainly put us in a pretty grim mode for the tail half of 2019. And
okay.
Yeah, so That was how we set up the New Year's, really.
Right. So if we hadn't have had that, well, I guess there's two arguments. One, that the rising prices you said could have been down to it could have been down to the fact that they were buying Bitcoin for the Ponzi, but at the same time, then the sell-off could have been because they were selling off. So
Exactly.
I guess that without that, you might have had a more like looking at the chart now, because I've got it in front of me, you might have had a more natural growth from, that this was like April. I guess it's almost like April to April, that whole year. You might have seen more natural growth.
That's right. That's right. You can almost sort of ignore that bump in the middle, and
draw a line
it would have been a normal cycle. But that threw a lot of us out, and certainly if you were trading in that tail end of 2019, though, it was one of the hardest regions to trade, because threw out all the technical indicators. Mr. PlusToken Ponzi wanted to dump, and then suddenly the price would go down. So, certain people that were trading price action could do quite well, whilst others using technical indicators, which tends to work more when you're detecting an organic sea of trading. But yeah, that wasn't working as well. And so, yeah, it was a interesting one, that. And totally unexpected. You can't, everyone loves to draw these nice cyclical bull bear charts, and everyone's projecting last year's or last cycle's charts onto this year's and into 2021. But if anything, we've seen in each cycle, but they're just so different, and you almost can't guess what's going to happen next in terms of the ups and downs of how it navigates through the cycle. We can certainly predict the sort of cycle we get from the halving. It's every 4 years, and I don't think that's going to change for quite some time. But certainly how we navigate ups and downs, it's different narratives every time.
Well, March was pretty interesting as well, because again, at the start of the year, we were around 7,000. We were building up to 10. I think everyone's starting to feel confident, and then news of pandemic, jitters start, and then we have that huge sell-off. Is it March 12th? And the volume on March 12th, March 13th was huge.
Ridiculous.
Did that hit you by surprise?
Yeah, I'd say so. I mean, I remember tweeting saying, "Here we go, we're ready to launch 10,000," and then I would say I was looking into the COVID data a lot more than blockchain data at the time, and I remember Goldman saying, brace yourselves. I forget what they gave a particular number, and they said X percentage, bet on X percentage of the world contracting this, and this kind of, it was just really grim. And interestingly enough, that this thing absolutely collapsed, and we've been waiting for this kind of event as Bitcoiners for ages, right? Everyone's looking for the black swan crash. This is the doomsday kind of crash, and it certainly felt like that over those few days. And I remember running a survey, what did people think, and people thought Bitcoin would go up, and I said, I think it's going to go down very quickly and then a rebound hard, because we saw stuff like this happen in the 2008 world financial crisis, because as everyone's getting freaked out, they sell and they exit all their leverage positions. They sell everything they're in to cash, and that's that flight to safety. And we saw that in Bitcoin. Certainly, if you were trading it, there was not enough liquidity on BitMEX and these derivative exchanges to hold the price up. Everyone was just dumping, liquidations falling on top of other people's stocks and liquidating those guys. It just was a mass carnage, and I know people sold off as well. There was this time where you reassess this risk. You reassess your risk profile of, well, we're in a whole new world now post-COVID. You reassess your assumptions, and so while you do that, you sell to cash. And with that in mind, like Bitcoin over the next, 3 months, I think, went from roughly $10,000 to roughly $10,000, and that was the assessment. But of course, you had this flight to safety as you unpack their exposures back to cash before redeploying.
Yeah, it's a really interesting chart because it's essentially the same chart as almost anything at that time. You look at the S&P that dropped. If you look at Willie, if you look at my podcast downloads, I have the exact same dip. March and April.
Yeah, of course, right? We're glued to like COVID news.
Yeah, exactly. People won't listen to podcasts. There is the opposite. Yeah, you have people like Netflix. I'm sure their chart just spiked, amazing, and news. But there's a lot of charts out there that just saw that drop. It was quite interesting. Volume-wise, how did that compare? Because that was essentially they were the biggest days of the year. But historically, how did they compare?
Funding wise, I think it was a big. The funding over that period is very annoying because whenever you're looking at those charts, it's a spike that's so far off the charts it screws with, all your normal signals. It was very, very. Everyone was shorting. Everyone wanted to short, so it was very. It was very cheap to go. Well, you're being paid to go long by an immense amount, and of course. That was the right bet. It's usually that way. So, yeah, it was a very, I'm looking at this right now with the on-chain charts. I remember, I was busy trying to figure out where to be over COVID, and I wasn't looking so closely at the charts at the time. But, I'm looking at it now and I'm going, yeah, the speculators sold off massively. BitMEX was the biggest, pullback because they didn't have enough liquidity, and even the exchange froze its order match. It went offline. I think the order matching engine might have continued. On chain, actually, not a lot of coins were sold off. Like if you look at the investment velocity that was going between investors, that was pretty normal. Like there wasn't like massive sell-offs by spot investors holding their coins on chain. So a lot of what this COVID flash crash was derivative traders just really getting wrecked as they were liquidated. And it was just that, obviously that impacts the spot markets and pulled all of them down, and it became crazy cheap coins for anyone who wanted to buy in it. It was a half price special. And it took till May essentially for us to revert back to the normal price. And I think a few people were a bit shaken by it. I thought it would go back up because it's a safe haven. To me, this is what it was born to do, and I had been expecting a flight to safety. But from that crash, we started to see very, very tight coupling with like the stock market. People were trading it alongside it. So for a while there was this narrative of, oh, well, Bitcoin's a failed experiment in terms of a safe haven. It's just another correlated asset that we can trade. And so there was that. But that was only, I think it was just very strong post-COVID. And in some regard, I think it's an ongoing thing that started to come in around 2018 onwards, that Bitcoin's liquidity had gotten big enough so that it was big enough for pro traders to come in, and we had the invention of perpetual swap contracts so that essentially BitMEX, where you can do high leverage trading. So it became this very tradable asset, and pro traders love to trade correlations. So that sort of developed. We developed, and as you start to form into a trading relationship and correlations to other other asset classes. It's a self-fulfilling prophecy. It's dipped before. Oh well, let's sell it because it's going to dip again because stocks dipped, for example. So we kind of got into a gravitational lock with equities over that phase, and it was very strong. And one of the interesting things for me is, I track on chain obviously, and one of my indicators that you can go to my site. It's charts.woogle.com. And I've got price models on one of the charts, and one of these lines, you see a lot of these traces, and it's NVT price. And NVT price looks at how much volume is circulating between investors at all times, and then it tries to map that up to a valuation and a price. And you can see these times where the market price starts to come down and approach the MVT price, which is like the organic valuation of Bitcoin, and it bounces it off. But often it bounces it off. In COVID, it whipped down and dipped underneath it as traders got liquidated, but that was very short. The spot investors held their ground, and I could just see this MVT price going up and up and up. And as traders were trading this correlation to stocks, it's like this moving wall of death. You can't short if the stocks go down, and this moving wall of death of Bitcoin buyers, powered by more and more people parking money into Bitcoin, is coming up at you. You can't short against that because the spot buyers will continue to buy you out at those cheap prices. And we saw that happen for the very first time. And it's like the proper decoupling from that correlation in October of this year, when stocks started to crash while Bitcoin just went ballistic on a really organic run, powered by the likes of Michael Saylor, the likes of PayPal announcements, Square Cash, and everyone started buying. And if you were to look actually at the flows of capital, they had actually started buying in March of this year. Actually, they started buying around the COVID worries of 12th of March, almost to the day.
Who did?
They did.
They, just the corporate side.
Well, the narrative I would attach is that high net worth, but particularly the Michael Saylors of this world, I think it was them and their cohort.
Right.
Michael Saylor's been on record saying, it took us 6 months to go through the process for our company, get through SEC approval, board approval, and just gear up to do it. And you backtrace that final announcement that they had bought their, 200 and something, and then $425 million of Bitcoin. You backtrack that to his 6 month time period, and it started in March before COVID. And he announced that he had bought something like, 117 million in his own cash holdings. Yeah. And so the narrative I put on it is that the CEOs and directors of publicly listed companies are some of the most well-networked people in society. And when they buy, they tell their friends to buy. And I think that's the influx I saw on chain. I don't know who it was, but I saw 600,000 coins get depleted off the speculative inventory sitting on spot exchanges. And never in the history of Bitcoin have we seen such a crazy depletion of inventory sitting on exchanges. And so that was responsible for really driving the bottom price of Bitcoin up and up and up until we decoupled. And it sets us up for this crazy 2021 year ahead. I've got absolutely no doubts this thing's going to run. I've never seen that amount of depletion. We saw this kind of depletion happen in 2016. I call it reaccumulation. You kind of have they're really the people who put the bottom of the bear in. They put the floor in. They'll buy, and you'll get this sort of price compression where sellers keep selling because they're bearish, but it just doesn't go down because these guys just say, no, I'll buy that, and so the volatility just drops off a cliff, and it's just this narrow band. And then once those guys have kept buying at that price range, the sellers give in and they leave, and then the price rebounds, and it rebounds and goes up, and then normally that sort of shakes out, and then you get this new phase of reaccumulation happen. And they're the guys that time the market very well. They can see this has already signaled the bottom, and now we go in. And the last reaccumulation band we had in the last cycle, 2016, it was tiny. It was 5 months long, and it was like a 10 or 9% depletion inventory off the spot exchanges. This one lasts for 10 months, and it's double, almost 20% inventory got scooped up.
How much did the halving play into this as well?
I think it's not to be discounted. I mean, it's the impulses, it's the supply shock impulses that get us our 4-year cycles. And I'm very quantitative. I look at the numbers. If we looked at PlusToken, it's like 250,000 Bitcoins. We've seen 600,000 coins scooped up off the spot exchanges in the last 18 months. Over that period, it's around 850,000 coins that is new supply being coming through the miners. So when you filter out these sort of influxes of buying and outgoings of selling, and these ripples, this sort of steady heartbeat of Bitcoin supply shock from the miners is very significant. So I'd say it has set the rhythm, but the things that are really pushing it right now are the Michael Saylors of this world, and I'm looking at the demand and supply. How much was dumped by PlusToken, how much miners dumped onto the exchanges to sell off, and still you have this inventory depletion. It's a 1.75 million coins that's been hoovered up by all the buyers in 18 months. That's like almost 2 Satoshi Nakamoto's supply of coins in 18 months. That's 10% of the Bitcoin supply almost. More than that, because it's like we say there's 18 million coins and 8.5 million coins in the Bitcoin supply, but the truth is there's only 14 million because a lot of it lost. And then you say 1.75 million just got bought up in this very compressed space. Yeah, it's we're gonna have a lot of Lambo memes and moon memes in 2021. That's without much doubt.
Next up, I talked to Willy more about the Bitcoin market and the trading environment for 2020. But before that, I've got a message from my amazing sponsors. Okay, we're going to talk about Kraken, which is my favorite place for buying and selling Bitcoin, and it is the only place I use now for buying and selling Bitcoin. Okay, why is that? Well, firstly, they are consistently rated the best and most secure cryptocurrency exchange, and security is really important to me. They also have the best in class in customer service. So, whatever issue you have, whoever you are, wherever you are, they're going to get that shit fixed for you. And if you want to start trading Bitcoin, well, they have every tool you could possibly need. So whatever your level of experience, if you head over to kraken.com, it could not be easier to sign up and start trading Bitcoin. They also have a beautiful mobile-first app, so you can buy Bitcoin on the go, and with their margin trading, futures, and OTC desk, Kraken has every option covered for you. There is no better place to trade Bitcoin. Find out more at kraken.com or download the app. It is available for the iPhone and Android. Just search for Kraken Pro, which is KrakenPro. Also, next up, we have BlockFi. And they had a big announcement recently. BlockFi is launching a Bitcoin Rewards Visa credit card in early 2021. I'm really, really excited about this. It's been coming for a while. Okay, so check this out. Card users can earn a market-leading 1.5% rewards paid in Bitcoin on all card purchases. Note this, there is a $200 annual fee, but you can earn a $250 bonus in Bitcoin after spending $3,000 in the first 3 months. And you can also stack sats with all your card purchases. The waitlist registration is now open to all BlockFi registered clients, and if you want to join the priority waiting list, then you need to open up a BlockFi account. The public waitlist is slated to open in early January. If you're interested in checking out BlockFi, I do always say do your own research and then head over to blockfi.com, which is blockfi.com. I mean, the run up from September is super interesting. It's essentially, I guess, I mean, it started like it's back in March after the sell off, but it's a massive run up, really. It looks really similar in some ways to the run up from May of 2017, whereas a couple of dips and then nearly vertical. But the difference between this and 2017 we spiked and dropped. It feels like we're consolidating. We're actually consolidating at 19,000.
Yeah. Yes, I write a investment intelligence letter, and I after that run up, I said, what next? After the most organic rally we've seen in years, this recent one we've had. And sure, on paper, like looking at the price chart, they look quite similar, but the structure of what happened underneath them was completely different. Like what was it? Sort of like April. It was April Fool's breakout.
About that.
It was. I remember that. It was. And actually, it was April Fool's Day on. I was in Bali at the time. I think it was 10 a.m. at the time. And 10 a.m. is this time where all the action often happens with Bitcoin in Bali time, and that happens to be the lowest volume traded over the 24-hour clock. And so, during that time, at the minimum volume, Bitcoin broke out. And if you're a trader, you'll know that it's just a game of bulls versus bears. And the more ammo you have, the more capital that's at your disposal, the more you can push the price around. And the price was pushed above the resistance level at that hour. And everyone stops got hit, meaning their risk protection kicked in, and rather than shorting, being in a short position, their emergency stops kicked in, and they bought back their positions. And of course, as they buy back their positions, the price goes up a bit, and then the next person at the higher level of risk protection, their stops get kicked, and they all got kicked. So we call this a short squeeze. People who were shorting got squeezed out, and the price went sheer vertical from what was it? I think it was 4,200, and went vertical to 5,000. That's a big jump when the price is only 4,200. It's like a 20% jump in hours. And then if you were to look at what was happening at that point, everyone was in disbelief, and they kept re-shorting it, and so the price squeezed them out. And it was one squeeze after the next squeeze, and it was just payday for whoever triggered that first one, and just kept, and it sliced through this, what we thought would be the mother of all resistances, because we were at 6,000, had been trading. This 6,000 bottom had been trading for like most of the year, all of 2018, and it just sliced through that level like hot knife through butter. And this was also happening with the PlusToken Ponzi, right? But the price was like way above organic. It was just crazy. And that's not what happened this time. It was a very low volatility rally. It was driven by a lot of volume by spot investors buying the underlying Bitcoin and taking it off the exchanges. And you can see that there was a huge, since March, since COVID, there was this depletion in stock inventory, and come the start of this rally in October, it started to go steeper downwards. Like these coins were being hoovered off the spot exchanges at almost twice the rate, and so it was very much driven by organic buying, and I saw more people come into Bitcoin in that phase than unseen since like kind of October-ish of 2017. If you can imagine the fervor in the markets in October 2017, when it was just a month or two away from grandpa telling you to buy Bitcoin because it's the next big thing.
Yeah. What do you make of this consolidation though around 19K? Like, it's a strong signal, right? I mean, it's had a couple of dips like to 18 and 17 and a half, but recovered really quickly.
Yeah. Like I've been saying, that the buying pressure is just so high. When we topped out, like, you could see it. Like, I put out a notice about, I think it was about 9 days before the top. I said that we've got around a week left in this, and you could start to see that the buyers now were smaller buyers. They weren't large whales, institutional, and they were more akin to like the retail starting to come in late and into a rally, and that's usually a sign, if you look at the back trace, that these rallies are starting to top out. And so I gave it a week. It did sort of win about 9 days, and then we had that sort of big pullback, and it started to consolidate, and like that kind of to be expected because the buying hadn't stopped. A lot of people coming in, like, and a lot of buying. So that typically when you have a rally like this, you kind of expect Bitcoin to pull back 30%, sometimes even 40%.
Yeah.
But I think it was barely over 20% in that first wick, and that was very fast. And now it doesn't want to really go down. And one of the indicators I look at is, it's the acronym SOPR, SOPR. That indicator shows essentially for the people, you can imagine surveying all the investors that are selling their coins. You look at how much profit they made, whatever's attached to those coins when they bought and when they sold. You can see that on chain. You kind of run the average across the entire day of who sold their coins. Some are in loss making, some are in vast profits. And generally, when you get this point where in these rallies, the profit keeps increasing as people are selling out. The rally's going higher and higher, and at a certain point when it flattens out, the profit carried in these coins start to decline. And we're doing that now. We're in this phase where people are like, we're waiting for the people who are going to sell to completely sell out. We're waiting for SOPR to indicate we're reset now and no one's at profit again.
But I've got a question around that, because if you look at the types of buyers we've got now, the grayscales, the mass mutuals, the micro strategies, some of these buyers and the people that are buying through grayscale, they might not want to sell ever. Or mass mutual, why are they going to sell? And so I think you tell me if I'm wrong, or if there's an indicator that shows you this, but it feels like we're getting more long-term hodlers come in, whereas like 2017 felt very retail-based. I think people were buying and thinking, right, when do I sell this to make my maximize my dollar profit? I think we got people now who are buying who just like, they're not even considering selling.
Yeah, this is that's a different indicator. Chain Analysis created one that was it essentially measures how liquid are the coins, and as the coins become less liquid, it means the coins are being bought and then sold and bought and sold when it's liquid. When they're not, they're being bought and held, and you can measure that using you can measure coins going into wallets and just not being releasing. They're just an accumulation. Yeah. And so that's exactly what's happening, and it again coincides with the coins being hoovered off the exchanges starting in March. So that is for sure. Those guys aren't selling. Locally, we're waiting for the short-term speculators to move their coins out and deplete. Whoever's going to sell and get off the bus now. Once they're completed, we can move up. Probably got another few weeks, probably into January before they get off the bus. Yeah, so just waiting for that.
So you think this will chop under 20 until then?
It doesn't guarantee it. We could break above, but we don't get a free ride to the next new, highs into the 20s, 50s till we can get these guys unloaded. You do sometimes see it when the market goes into utter FOMO, and that you only see in the mania phase of the bull market, and we're certainly not in that now. It's very measured buying by very long-term investors. Not much FOMO at the moment. Everything's organic. The price isn't just ripping off what these long-term investors are signaling. So I think we just go sideways here a bit. We might get another little feedback, but not much. We've got a bit of. Yeah.
Let me ask you: Did we get an all-time new high?
Yeah, we did slightly. I don't call it legit. I call it. Yeah, if you want to split hairs, we're a little bit higher than we were in 2017. The main thing is we're spending a lot of days and weeks at these highs. Like the last highs were the last dying breaths of that bull market, and it just got over the line before it cratered back down. Yeah, we're just sitting pretty with lots of legs to run on this thing.
Right, okay. Well, let me ask you then, we're obviously looks very good for breaking 20 without, subject to not having any crazy bad news. 20K always felt like it would be like a price that we would bump up against. We would tag it a few times before we got through, just because of historical context. Psychologically, it's a barrier that we all remember from, what happened in the previous bull run. What happens after this? Like, how do you consider that? I know you've put out a prediction, quite a strong prediction, quite a strong six-figure prediction. We have, Pomp put out 100K, I think, the other week. I've seen people put up to 300,000. But, like, how do you really prepare for this yourself, Willy?
How do I prepare for it?
Yeah, how do you prepare? And what are you looking at? What are you thinking about? Because I don't know what the next mental barrier for me after 20K is 100K.
Oh, okay.
Because it's a new psychological big number. There will obviously be ups and downs on the way, but we have a lot of interest, right? If Michael Saylor said it took 6 months and he's told everyone who's done it, a lot of other companies might be thinking, right, okay, we're interested, but they might then take them months. We could have a lot of people coming in early next year. And I was chatting to another guy who trades traditional markets, and he said this could get very choppy. There could be a real issue with supply of coins, like a real issue with coin availability on exchanges. He said you could see some really big jumps. Yeah.
I think we're very much coming into a phase where we're going to see a supply shock. I've been measuring this. George Soros came up with this term called reflexiveness, which is the tendencies for particularly commodities to fixed supply commodities to have this feedback loop. As the price goes up, the sellers want to hold on to the commodity or the asset harder, so there's less supply, and because of that, the price runs up higher. It feeds in on itself, and I think most people thought most definitely Bitcoin showed reflexive properties, because you just look at it, the last cycle went ridiculous, like almost 100x, did 100x. And I measured it. I did the study looking at how much does the market cap increase for every dollar that goes in. And it turns out that all the past cycles, they were the dollar gain in market cap or price per dollar put in was flat. And what had and actually happened is that as the price ran up, the old hands, the whales, the guys that bought from the early days, and we see that on chain on the records from when those coins went into their wallets, they start selling. The old hands start selling. So there was always this supply being sold down into these runs, and it kept the reflexiveness flat. And the interesting thing about this time is that it's not flat; it's going up. It's increasing. So the first time are we sort of behaving like what Soros predicts for these kind of commodity markets, and so I weigh that with the amount of capital that needs to go in to push us to these crazy market caps that will, like if we go to 100,000, that's like a $2 trillion market cap. And currently it's about $3.50 of market cap gain per dollar invested. So I'm just going to punch that through calculator by.
I think it was about. Someone told me it would.
We need $500 billion to go into this thing. We need $500 billion. We need 500 Michael Saylors to push us to $100,000, right? So
or 2.5 apples.
Yeah, it's not. That's assuming the reflexive or that ratio doesn't keep climbing, which it is right now. So you've got on the one hand this immense amount of capital we need to float the boat, and on the other side you've got the amplifier of that capital to drive the price increase because people are holding on tighter. And the next key sort of mark in the sand for me is $55,000 Bitcoin, and that broaches us into that $1 trillion resistance level of market cap. Bitcoin becomes $1 trillion asset bucket, and at that point, all major macro asset buckets are $1 trillion, and Bitcoin's not even in that league yet. And so once we break that, I think that's big news, and I think it then becomes a black hole, and it sucks in other assets, particularly gold, because it's kind of a antiquated old version of Bitcoin.
Isn't that funny though that like when people used to say that, I would say about a year ago they'll say like calling it boomer rocks or it's just a lump of yellow metal. I was like, no, come on. Gold has a long, strong history. Governments hold it, but like I can see retail dumping their gold into Bitcoin quite easily. What the interesting thing there is like, do any governments who are holding, gold reserves within their gold reserves are also then themselves considering, shit, do we need to be getting on this train?
I mean, yeah, like what was it? Not Michael Saylor, Raoul Powell just sold his gold to buy more Bitcoin. Once you start to see these, global macro guys, and of course they're in cahoots talking to each other too, start to reconsider their exposures. I think it started from the smartest money that understand this game. Those guys are the ones that understand macro assets the best, and we're starting to see the first of those guys start to come in. What was it? BlackRock said, we recommend Bitcoin. They manage $7.8 trillion of wealth. So I think
everyone's getting ticked off. I mean, JP Morgan have come out with quite a few statements. The Paul Tudor Jones investment letter this week said of all the assets for the great monetary reset, the way you want to hedge, Bitcoin is the fastest horse in the race. Like the cat's out of the bag now. I think we have the regulatory cover. I think we have enough big companies that have done it now that essentially, I mean, MassMutual essentially gave cover to hedge funds to do this.
You're not going to get fired to make that decision anymore.
No, you're not. But you might, if you've not got it within your portfolio, it might be questioned by those whose money you're managing. It's like, well, why have you not got Bitcoin? Everyone else has got Bitcoin. Why are you not doing this? And this is where this potential supply shock happens, where we see that kind of accelerated corporate FOMO next
Yeah,
year.
no, it's right. Yeah, so I mean, I'm waiting for the day that like someone gets fired for not buying Bitcoin, other than the other way around. That'd be hilarious.
Yeah, that would
But
be
yeah,
insane.
so we will need $500 billion, $500 billion to enter Bitcoin for us to hit $100,000. So I think of next year as the race to get to the $50,000 Bitcoin mark, and at that point, it gets the next power up to be able to start to suck in these other asset buckets, and can it get a $500 billion to $1 trillion to hit these $100,000 to $200,000 per coin targets? In amongst our unit of account being debased, that'll accelerate it. And so right now, these targets are, 100 is very, very conservative, I would say.
What was your prediction again? Remind me.
I said 200, 300 is not out of the question, but, once this thing gets going, it's really hard to see where the top is. Like, I can probably take a guess that, Pomp's 100,000. That's pretty conservative. I think we'll definitely hit that. I mean, I'm looking at my chart right now. I have a model that's based on, that has hit all the prior tops, and that just it's making a beeline upwards, right? And if I just continue that line, we pretty much hit it easily by the end of next year. But the thing is, as these bull markets start to heat up, every cycle in the past, this line starts to curve upwards exponentially. So if it stays linear to next year, we hit 100,000. But I'm expecting it to curve upwards like every other cycle. And that means we'll start to hit the 200, maybe 300. But I don't know how steep that curve will be just yet, because it's still in the linear phase. It's still in the early part of the bull market, believe it or not. So I think some people have said $1 million.
$1 million.
$1 million.
Maybe the next cycle.
No, this cycle, and I would say, I'm looking at the chart for my model, and it would need a very steep hockey stick, but I can't say that's out of the question. I can say 100's very conservative. I can say 200's right on track, or somewhere between 100 and 200 is a very conservative sort of sweet spot. 300 for sure. 300 to $1 million is actually not much of a gap, believe it or not, on this model, because it's all logarithmic. So, it just reminds me of, to the moon and Mars metaphors. But, if you were to go to the moon, the amount of energy that takes you to the moon, it's just added like a little bit extra when you get to Mars. It's a little bit like that on these charts. So
the interesting thing at that point, well, I guess, is that, once you start hitting, say $100,000 a coin, there's plenty of people out there with 10 Bitcoin who are suddenly on paper, they're millionaires. And if you hit $1 million a coin, there's plenty of people who are now millionaires because they own 1 Bitcoin. So I wonder if you still, once you see a sell-off there, if there's going to be enough buyers at that point, or you go through another like 80% retraction. I don't know what happens at that point.
Well, yeah, I'm like seeing people that are, I guess following Michael Saylor's lead and buying Bitcoin on margin. He's issued a 600 million debt instrument to buy more Bitcoin. And, when you're on margin like that, you tend to want to sell more at the tops because you feel more exposed. I don't know if Michael Saylor would do it because his loan's out to 2025 at very, very cheap interest rates. But I know people that are like pulling on some of their mortgage overdraft or something to buy more Bitcoin. And so certainly those guys will sell off. And it just depends how high we get. There's a lot of talk about, with the new institutional people coming in, they're much more longer term holders. Maybe the next cycle won't be as violently downwards. I think we'll probably still have a very violent down move. It's just in the nature of Bitcoin. I'd be very surprised if we go to, whatever it is, 200,000, and we only get like a tiny pullback to 150 or 100. That would be very unlike Bitcoin.
Yeah. Do you think Saylor's done that's? Is there any data to indicate that buying's happened yet? Because $650 million will move the market, right?
650 million. I'm like, a lot of the inventory depletion is leveled off since we peaked. So let's go 600 divided by 19 roughly. So we're looking at 31,000 coins. Look, it's very hard to see his buying in the overall scheme of things. I think what he did was start a whole cascade of other people buying. Even the 400,000 that was bought, it was a 35,000 bitcoins that he bought with MicroStrategy. That's like, I don't know, 5% of the inventory depletion of that we saw. And what is say 40,000 coins? Let's call it 40,000 coins next to 1.75 million coins that was sucked off the markets in the last 18 months. It's still a drop in the bucket.
Yeah.
We like to
that's kind of interesting.
He's very visible in terms of the overall scheme of the market. It's still very small. Certainly encouraging a lot more people to buy. It might be he's got a lot of friends. I recall talking to one head of OTC, and he said these guys, they like to swim together, and the whales like to swim together, and I'm assuming that he's telling me something from his dealings with filling the orders.
Well, he's doing a lot of work to promote this as well. He's doing a lot of media work.
Yeah, I guess MicroStrategy is now a Bitcoin company. Like, he makes $50 million a year in his software sales, and he's made like $500 million in Bitcoin gains in the last couple of months.
I know, it's insane. Well, similar with Square. Square did amazing with their 50 million purchase.
Yeah.
So
I'm surprised why they put. Why do you think they bought so little? They're such a rich company.
I wondered that. So two things I was wondering. I wonder if there's like that was an easy small amount they could do that was just easiest. I don't know what the rules the company has around their treasury and what they can do. I wonder if that was easy, or I wonder if it was like a test, like an obligatory test. But they must be looking now and thinking, shit, why did we do 10 times that?
I'm kind of wondering if, maybe their next move is to get banking licenses, and they need to be very, very conservative with
perhaps
that side of things to get regulatory approvals and whatnot. And so that's their bigger game. And they bought a little bit, but they can't be seen to be like, they're loaded up on Bitcoin and now they want to do this next thing and they've got vested notice or whatever. I'm not sure, but something like that I could imagine happening there.
So if we were going to round up, Willy, I wanted to conclude your thoughts for next year. You're basically saying don't sell because we could go to 200,000, 300,000, 400,000, then very quickly easy up to 1 million. Is that your prediction?
It's going to be more than right now. It's anywhere between $20,000 and $1 million, but let's say between $1 and $1 million just to be safe.
No way, man. Listen, I'm going to put a number out there, and you're going to have to put a number out there. I'm going to go with. I think we get over 100,000 next year. I don't think we get over 200,000.
Yeah, I think there will be 200,000. 100,000 I'd rate as very conservative, probably overly conservative. I'd rate 200,000 upwards as a sweet spot, 300,000 not out of the question. And I do not ridicule $1 million.
Wow.
Yeah, I do not ridicule the McAfee target.
Well,
a little bit late.
I don't know if we'll see him. Yeah, we might not see him eating his dick either, because I think we'll all forgive him anyway if we get to $1 million.
Yeah.
Okay.
Yeah.
All right. Useful. Okay, Willy. Listen, look. If people want to follow you, where do they find you, man?
Okay, you can find me on Twitter. That's probably the channel that's most publicly accessible and active. Woonomic on Twitter. You can go to my chart site, charts.woobull.com, and I have a newsletter as well. That's willywoo.substack.com. You can go to any of those and it'll point there. Look at my profile page and it'll point there. I do have a paid market forecast letter that goes out every sort of 2 to 3 weeks whenever the on-chain structure changes. It gives you an idea of what Bitcoin's next move might be. If you're a trader or an investor, that might be useful.
Right. Well, listen, I'll put that all in the show notes then. Let people see that for you. And yeah, thanks for doing this, man. Awesome. Wish you a Merry Christmas and a Happy New Year. And we're going to be talking again in January, I'm sure.
Yeah, looking forward to that.
All right. What do you think of that? How bullish are you now? It's pretty crazy to hear Willy say that he thinks $100,000 for Bitcoin is a little bit conservative. I think next year is going to be a pretty crazy year. It's going to be a wild ride. Looking forward to it. And as I said, Willy will be joining me every month to cover on-chain data. I'll also have Shinobi on Tuesday, as we're going to be doing a tech roundup for 2020. And then following that, I'm going to have a review of the macro environment with Lynn Alden. Some pretty cool shows to end the year out. As ever, you got any questions, you can reach out to me. It's hello@whatbitcoindid.com. If you want to support the show, head over to iTunes, leave me a review. And as I said in the intro, I have just announced that I'm launching a daily email service next year. It's called The Wake Up. If you want to register for that, that's available at www.thewakeup.cc. Have a great weekend, and I'll see you all next week.